Welcome to part 2 of my 3-part interview series with Tom Nash, a stock market YouTuber with almost 200,000 subscribers. In this interview, we talk about things like financial analysis, price targets, and due diligence, the sorts of analysis that should be performed before investing in a company. If you want to see part 1 before watching this, I'll throw a link up here. Otherwise, here's the interview.
So I would suggest go through the history of that person and see, the level of transparency as far as providing you also the risks and the downside and the bear case and kind of if there's a balanced report there, that's usually a sign of quality analysis. And if it's just everything is just hype and hype and hype, that usually means you got to be careful a little bit.
Yeah. So this is actually perfect because this is leading into another question I want to ask. One of the things that I really appreciate about your channel and what made me subscribe to you in the first place is that you did really deep dive analysis of the financials of a company, and you provided what at least I take to be educated bull or bear thesis of a company. But now I'm seeing stock market YouTubers that will, in some cases, publish a video every single day, sometimes multiple times per day, providing stock tips for new ticker symbols, a constant parade of new ticker symbols every single day. And from my perspective, I just can't imagine that it's possible to perform that type of due diligence and proper analysis of companies that quickly. And so you've been a financial analyst, you have an MBA. How long does it actually take to properly analyze a company? And in your opinion, is it even possible to put that kind of output out that some of these stock market YouTubers are doing and have it still be credible and authentic?
Well, the answer is no, and that's why I stopped doing it. I got burned out. I was trying to keep up pace with these guys, making deep dives, and I was completely burned out within, I wouldn't say, a few months. I was done. If you notice, my content has shifted more towards covering kind of the news, and I give kind of my quick takes about what's going on in the stock market, just because I feel if I either have to do less videos, or I'll have to be really and shallow in my due diligence if I do like a stock due diligence that fast, or I'm gonna burn out because I was about to burn out in my previous cycle. So now, what I've kind of been doing, I'll make one due diligence per week, and the rest of the week I'm either doing do news stories or like fun stuff. Like for example, just today for fun, I uploaded a video reacting to how Dwayne Wade manages his 200 million from his NBA career. Or yesterday, I spoke about the Alibaba fine. So it's kind of news kind of cycle. Um, so I think it, even if you make like if you build a DCF from scratch, even if you're super fast, you're probably looking at about good 5 to 8 hours to properly build it, because it means you have to go through the financials, you have to go through the business model. You not because the ones that people think that the ones I'm showing you guys on the channel is kind of like a proper DCF. It's a very very abbreviated, quick summary of the bottom lines of DCFs. Like a proper DCF doesn't look like that. It looks like it's a lot more robust. There's a lot more options and cases, and it doesn't. It's like showing, like in a Hollywood movie when they cut out all the parts where they sleep and go to the bathroom and go to work.
Yeah.
You just see the that's how like the analysis that I show you, like the DCF is just that. It's none of the boring stuff. If you go there's a really good channel called Couple Cents. It's by a friend of mine. His name is Justin O. I don't know if you're familiar with this channel. It's a really good channel. He has about like 70 or 80,000 subscribers. I've had him on my podcast as well. So he did like a proper DCF once. And you have to understand he's currently an analyst, so he knows how to do like the speed DCF. It's like the speed gamers where it's hyper fast. I don't know how to do these. And it took him like 3.5 hours to do a Tesla DCF with
Right.
a lot of public information freely out there. So if you would really want to do the diligence of a company and build a DCF, it's probably going to take you at least 3 to 4 good days to
Yeah.
get it like up to speed, and that's if you work fast. So,
And also assuming that you know what you're doing and you're not just some guy that picked up a camera and decided to make stock tips.
yeah, so that's why I've stopped doing those daily, because I was burnt out. I was working myself into the ground. So
Yeah.
I used to try to keep pace with this. I just couldn't. So I've shifted away towards news, and like once a week I'll do like a proper due diligence. I have one coming up tomorrow, which I've been working on all week between
Right.
my videos. I'm not gonna do more than 1 week, because it's otherwise gonna be.
Yeah. Well, that makes sense to me. And I think that must be one thing that is a red flag is that if someone is constantly pushing out new stock tips every day, it's like how is that even possible?
The
And
other
how,
part is, I mean, the red flag for me is like, okay, when they say something, where's it's like it's very there's no foundation behind it. I mean, when I hear somebody says, "I like this stock,"
yeah.
and then okay, why? Where's
I've watched YouTubers that they support their bull thesis and call it analysis by reading word for word from financial news sources. Like I'll type in what they're saying in a YouTube video into a search bar and I'll be pulling up articles from Yahoo Finance or the Nasdaq or whatever, and it's literally word for word what they're saying. So
I think that Reddit has taught us that everybody can do Wall Street level analysis if they have the time. It's not rocket science.
mm.
Some people on Wall Street bets, look, some due diligence on Wall Street bets, it's Wall Street level. They're really good. Um, However, the incentive structure of YouTube has caused a lot of really poor shallow analysis
Hmm.
to kind of float to the surface, which is not that amazing. But I think as the markets slow down and the whole bull run that we just had kind of slows down, it would weed out a lot of those people because it's it's going to weed out all the opportunistic people from YouTube and from the stock market as well.
Hmm.
So I think it will fix itself, so to speak.
Interesting. We'll see. We'll see. It's like something that I've been trying to do as a part of my channel is to try and distinguish between in the stock market YouTube space who is legitimate and who is not. And in my eyes, you are one of the good ones. And so that,
Watch a couple cents.
yeah, I'll check them out.
He has a really good channel. You know what? I can show you his stuff if you want. So this is his channel called A Couple Cents. He has 73,000 subscribers. He's really, really good. So this is a video where he built the whole Tesla DCF from scratch. So as you can
Okay.
see, the time step is 3 hours. And dude, I'm gonna show you how fast this dude is. So you'll see, like, this is like, it's a lot of work. He has multiple screens and he's running through it. Look at that, the speed of which he's doing. He's populating the whole DCF from the financials.
Okay.
You have to understand how much work that it is.
Yeah. This is only something that you can do if you really know what you're doing.
That 3 hours, bro, it's not human to me to see it happen in 3 hours. I've never seen anybody work that fast. He's legit. Like Justin is an actual superstar. So yeah, his channel is legit.
Another thing that I want to ask you about, you do price targets on your DCF, right? And you back that up with data and what you call reasonable assumptions.
It's still, yeah, okay.
Well, I
It's
mean,
subjective. It's subjective.
yeah, I think it could be debatable whether or not price targets are ever accurate because there is definitely a little bit of a guessing game involved there. But I've seen
It's a,
some,
a lot of guesstimate.
yeah. But what I wanted to ask is I've seen price targets where it seems to be founded mainly on wishful thinking, backed up with zero analysis whatsoever. And so, in your mind, what distinguishes between a price target that is credible and something that, I'm just going to pluck a figure out of the air and say, I'm going to want this stock at $100 in a year?
There's definitely a lot of that on YouTube, for sure, and I've seen it, and it's quite easy to spot. I'm not gonna tell you which YouTuber, which company, but a certain YouTuber was analyzing a company which used to be my own client in my previous career, and the analysis was so horrible. I mean, it was completely like they were talking, they were explaining what orange is by giving an example of an apple, pretty much, and it was so bad they even mispronounced the name of the company. It's like very low level research. Completely misunderstood the business model, whatever. So there's definitely a lot of that happening. But on the flip side of it, dude, a DCF is a very subjective tool. We make it look a little bit objective, but it has a lot of subjectivity. Um, just if you change the weighted average cost of capital from 10% to 6%, you're gonna double the valuation of the company. And you can easily it's or if you change the long-term growth rate from 4% to 5% or 3 to 4, or if you're gonna change the if you say, well, I think the company is going to grow by more than it's grew instead of 20%, 30% per year for the next 5 years. There's a lot of subjectivity in the DCF. It's just a way to present your own personal opinion of where the company is headed. What about the multiplier, right? Which multiplier to use?
Hmm.
Because I can say, well, I think Disney is a tech company. And you say, well, no, it's not. And it's different multipliers to use for the EBITDA multiple. So there's a lot of subjectivity there. However, I think at least when you do some sort of a DCF work, then you kind of substantiate your argument more than saying, well, I think it's $100. You know what I mean?
Yeah, exactly. Yeah.
But it's not rock. It's not science. It's 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 very subjective.
Hmm. So, I mean, it's interesting because to hear you say that, and this coming from someone that I perceive to be credible and legitimate, um, you are saying that you're cautious with your assumptions and that you wouldn't necessarily bet the house on an assumption like this. But then
Well, I'll tell
we,
you what. When I do a DCF, for example, I always use, and Justin does the same thing as I do. We always use a 10% weighted average cost of capital, which is the discount rate at which we discount future cash flows back to 2021. Um, el- the reason that it's cautious is because interest rates are almost at zero. So your actual cost of capital today is very close to zero. You can say 2%. So we have that 8% margin, which we use to counter the subjectivity of the whole tool because
hmm,
we're essentially undervaluing by 8% of discount, which is massive.
yeah,
Every single company we look at. So that's how we use the belts and suspenders to protect ourselves against our own subjectivity.
yeah,
But I could easily discount things at 5% and say, well, that's still double than the interest rates on 10-year T-bonds. You know what I mean? So it's your responsibility as somebody who's in the stock market to protect yourself from your own subjectivity, I think.
for sure. And if someone who is a financial analyst is being cautious and is not going to put too much weight behind some assumptions, then when we see stock market YouTubers that probably have no business providing stock tips throwing crazy price targets out there and suggesting 1,000% upside based on absolutely no fundamental underlying analysis, it seems like night and day to me.
Well, think about it this way. Outside of Tesla, which company has made anything close to, you know, 500 to 600%, 5x, 6x, the stuff that you hear on YouTube, right?
Mm-hmm.
How many, like, I think Palantir will do it within the next 5 years, and Tesla obviously did it, but there's really, it doesn't really happen this way. Even if you go back and look at Amazon, it took them the better part of 2 decades to go crazy. I mean, companies don't just 5x in 2 years. That shit doesn't. It happens, but it's extremely rare. You have to be extremely disruptive and very good at executing in a very hot industry, which is pretty much just describe Tesla.
Yeah, but of course, everyone wants to 10x their money within the next year, and that is the type of clickbaity hype that I'm seeing all over stock market YouTube.
If I make 10% to 15% this year in the stock market with my portfolio, I'd be super happy. That's my target price, and I think it's an ambitious one.
Mm.
But a lot of people have gotten used to this bull run where they think it's very low. No, that's um, people tend to forget that you used to be like when you buy like a, let's say you buy real estate property, right? And it's a commercial or residential, doesn't matter. If I tell you, well, you make 3 to 4% a year, you happy. That's 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 decent.
Yeah.
Well, it's not decent, but it's normal. You make 6%, it's amazing. You make 10%, it's insane. And in the stock market, the last year, people gotten used to this thing where you just like you make 40-50% within 3 months, and then it's gonna become the new normal. And
Yeah.
um, if
People's
that's your
expectations have
yes,
shifted. Yeah.
and I think you have to have realistic expectations of what you can get done in the stock market.
Hmm.
Um, and you definitely shouldn't be putting your last money
Yeah.
in the stock market
Absolutely.
anyways. It's not intended for that. It's a casino.
Yeah. YOLOing your stimmy isn't the approach that you would take.
No. If this is your money that you're supposed to pay bills with and eat with, it should never, never, never go in the stock market.
Yeah.
Never.
So
Only invest money you can afford to lose and not give a shit about.
yeah. And do you actually think that stock market YouTubers making outlandish claims and people that probably have no business providing stock tips are actually going to weed themselves out and self-select for only the cream?
Yeah, because the views are gonna dry out. As the stock market kind of cools down, it's not gonna be the same frenzy of views. And then if you're not really passionate about this, you're gonna basically there's no more incentives to do these crazy videos anymore. I'll still be doing my news videos and my due diligence videos because I enjoy it. But a lot of these YouTubers that do it for the views and for the numbers and the money, they're probably going to find a better incentive somewhere else.
Yeah.
But I
Although
think
you,
the good stock YouTubers will stay. I mean, there's a lot of really good stock YouTubers, stock market YouTubers. Like I showed you, Justin, he's really really good. Um, there's quite a few of them who I really appreciate. But
mhm,
a lot of this noise will go away. But yeah, a lot of them will. It's just a natural selection process. Once the money dries out, which it will, because it's not going to be as crazy as before. So it's going to be much less predatorial in the claims you see in the thumbnails and the titles.
I hope so, honestly. But I'm sure you must have noticed as well that when you put a thumbnail and a title that has claims of, significant growth potential, that's going to get more clicks, more views, right?
I noticed that, and I'll do it, but I'll only do it with companies I'm extremely confident about. Like I have no issues with a thumbnail saying Palantir will be $1.5 trillion floating around the internet. And I know I'm gonna get called out about it because in the short, medium term, they're gonna swing right and left, right?
Hmm.
But I'm 100% confident that it's a very I know I'm confident in this being my belief. I'm I've never done this for views. I only done it with companies. If it falls, I'm not gonna feel bad because I'm saying, listen, I've dedicated countless hours to analyzing this company. I believe that this would happen, and if they flop, I said, well, there was no way for me to know this. I wouldn't do it for some, um, company that I don't give a shit about.
Mm.
And if you go back and look at my channel, I only did like these outlandish claims about Tesla and Palantir, which are my
Hmm.
um, company, the go-to companies, which I really am extremely bullish about. The other stuff, I just try to stay more grounded in my claims. But every once in a while, I have to put the Home Alone face on the thumbnail to get some clicks.
Yeah.
People hate when I do it.
But they still click.
They say click, yeah.
Thanks for watching. That's the end of part 2 of my interview with Tom Nash, and the third and final part will be coming shortly. So if you want to see that, as well as more content about investing, personal finance, and entrepreneurship, please subscribe to the channel, and I'll see you next time.